Welcome to the jungle. Yes, that's right. It's the crypto sniper coming back at you. Wow. So we put out a YouTube just about a week ago talking about Bitcoin dominance and how a pending alt run is coming. But for one cautionary element that we got 100% directionally wrong. That was, will Bitcoin go up or down off its new levels? And we warned, because we flipped our charts, we saw a little bit of a potential reversal. We warned there was a little bit of a possible dark cloud. Could the alts be going up in dominance during a period that Bitcoin could be going sideways or down, as well as if it was going up? We warned there was that possibility. During that period, the dollar had been super strong. That's right. The dollar had been dominating since the beginning of this year. There was only two major months that there was slightly red candles on the dollar index. Just about every month had moved reasonably and pretty consistently, not an absolute blow off, but pretty consistently in the favor of the dollar on the dollar index, which is of course measuring it against the euro, the pound, and the yen, which you all know about in terms of its overall performance. However, there was a rising wedge, and we'd highlighted that on Twitter on the Market Sniper, at the Market Sniper, and also on at the Crypto Sniper. But sometimes you can dip down and you can re-rally out of a rising wedge. Sometimes you can pop out the top. But there was looking like there might be a little bit of a turn in the data. We got this read 100% wrong, because on the FX side, we were expecting dollar weakness, but we continued to see the dollar inching up. Eventually, the turn came. Bad unemployment numbers about 10 days ago. A bad core CPI number, meaning that it was an undershoot, pointing to the retail guys being crushed. And even though we'd seen this data turn, we talk about trends in data. We'd seen the everything awesome period, the first quarter of this year, and we started to see the everything maybe not so awesome with undershoots on the power of the economy, unemployment, etc., the second quarter of this year. But the dollar had continued to grind higher. Why? Because America is expected to be stronger. Europe had done a rate cut. Switzerland had done a rate cut. America still hadn't done a rate cut. However, the most recent data had a marked effect on the dollar index. That rising wedge broke down. We'll be showing you that. And what it did is it provided a most needed, after a pretty weak Bitcoin spell that had seen Bitcoin coming down, and we'll be looking at these charts in a minute, from around the 72. We called a double top at the 67 neckline. From around the 72, it tapped twice against the 72 more recently during the May-June months, after making a high in March. That was the last time we were at high, and spilled out of that double top, making that target and falling further to the downside and looking really weak. The dollar came to the rescue with its sudden weakness, and this time Bitcoin responded. Also, during that time, apart from unemployment numbers getting higher, CPI numbers getting lower, as a result, more concern for the economy, which meant less likelihood of further tightening, greater likelihood of further easing on the monetary policy, which shows that Bitcoin does need a weak dollar to help get it going often. On top of that, we've had the recent incidents with Trump. Whatever you make of it, I'm not going to get into the deep weeds on that. But Trump is being positioned as the crypto president as well. Now, that's kind of a tiny bit weird, because when Bitcoin, I heard a question put to him on Bitcoin, he was talking about the dollar. But more and more recently, there's been a little bit of a softening of that, and he's been positioned as a little bit more friendly crypto-wise than, say, the Democrats. So when you combine the sudden weakness in the dollar, Trump now almost assured to win the popular vote with all the heroic fist-waving post-Ian Nick moments, make of that what you will and the probabilities thereof. You sit with that as an int. And then we had Lol Finkelstein, Larry Fink for those of you a little bit less in the loop in terms of my typical phraseology, coming out and reasserting Bitcoin. So we've had a sudden surge in positive media, a turn in terms of president outcome, and the dollar flipping. Don't forget, in the down leg that we were witnessing, the Bitcoin had actually traded as low as 53,000 after early in June being as high as $72,000. So you've gone from 72 to 53, a steady decay. We flipped our charts and we said, could this actually be, on the inverted charts, and we'll go to those same charts in a minute, a double bottom that you're now seeing a potential further demand destroying event come in, because nobody is weakening the dollar, nobody was doing anything to support Bitcoin. Maybe we're going to have to spill first before we get the proliferation and the normal medicine. That hasn't happened, and we were 180 degrees wrong on that. And in fact, the three drivers, Trump as president friendly for crypto, Lol Finkelstein and Saylor making big Twitter weather of how supportive he was of Bitcoin. Don't forget, Saylor bought in and around the low 70s, upper 60s, only to watch the Bitcoin wash all the way down to 53. And then we had, of course, the dollar weakening. So those three drivers seem to have put a fire back into Bitcoin. Let's start looking at some of those charts, because I've spoken a lot about, a lot of things that you have to visualize. So here's Bitcoin. There he goes. Now we're back on the normal way up chart, and I will show you the upside down chart, and I'll show you how the pattern threat has been invalidated that I think was occurring. I still maintain the 60k is a very, very interesting level. It has broken through though, and we have traded on this recovery leg as high as 65,000, currently trading 64. So this is back to our primary view, which is this is a massive broadening structure to the downside that eventually turns into upside continuation. Many people are confused because we talk across many time frames and we consider all possibilities. So you'll say, oh, you're flip-flopping. We'll get that a lot. We're always prepared to reassess our view, and we can say now that that W bottom, we've done enough of a move, and I'll cover that when I flip the chart to show you that original analysis that has not worked, pattern failed, and why it's a pattern fail, that sees us revert back to, okay, we're in a broadening structure with a little bit of a downward angle on it. That's what I'm showing you here. That's your splitter over here with a bullish pole that had medium up, stronger up, blow off up, that took us to the 72. And then subsequently, this is a bit of profit taking and weakness, lower lows, and now we are expanding back into this breakout. Now the irony is, we're on a 3-day chart here. The irony is, on a weekly chart, it's very similar to what gold did a while back, and gold has moved on to the upside from that. You might recall the 2021, we hit a gold high, and then we had this kind of pattern, pulling back, eventually for gold to break above, and this we were involved in calling, to break out of its structure, grab the key level that it was, and I would argue that, your candle levels is roughly 70,000, 71,000 over here. So I'd look to the 70k, the law of round numbers, that there's also a horizontal level in here that you just couldn't seem to stay above this far. Don't forget, on a CPI adjusted basis, this is all very close to the 69s and 64Ks of the previous bull market. So when you divide this by CPI, we actually haven't made a new high on the others. The inflation that's come since the previous high means that Bitcoin is still lower in real terms. That's inflation adjusted terms. So I'd argue in the same way that this was the 2K for gold, we just ran through the 2K and we kept getting knocked back. Eventually we broke the 2K and actually set up an upside HVF. Now, this is not to say Bitcoin has to follow the exact same path, but it's typically how you square up out of big long-term frame broadening structures. It sat on the 2K and then melted up, and then recently had a period of support at around the 2.3, and is now melting up for a new high. That's right. Gold is actually making a new high. Of course, it's a much bigger market cap. It doesn't move the same percentage terms, but that's the journey path gold has gone on. Only that pattern was a bigger time frame than the 3-day. Were Bitcoin to do something different, it would be do something like this. So the inverted head and shoulders that we've drawn for Bitcoin with the 145, that's still good. That still has the potential to materialize. It didn't get invalidated. The upside down view did. So we've got to cover this Bitcoin aspect in good detail to explain why we've, it's been flipping and flopping. It's been a weird and difficult read. So where's the 145? How's that still valid? That, as a reminder, is your 145. We used the light blue. It came from the neckline of legacy setups. There's your 47.5, and there was shoulder and shoulder with a big rounded head. That is still live. When is it, and how do we be wrong about that? You will always, when talking about the future, be wrong, and you should absolutely admit it and take your lessons for it when you are being wrong. And we were wrong on the potential for Bitcoin to continue to spill lower. Why we'll cover now, and what does it tell us about the market? Well, the fiat market is in trouble. The dollar isn't able to stay strong enough to stop gold from making new highs, and quite likely to stop Bitcoin from doing the target here that we've called round about the 145. Go and see previous videos on this overall upside move and why we still have a 145. Where and when do we recant and say we're wrong on that one? How far would Bitcoin have to fall? It's quite clear. That's your right shoulder. You would have to fall below the 40k. So this is still good, and this is just really a continuation descending megaphone on a major bull pole that actually you could argue came all the way from here and all the way from there. So we are still in that continuation pattern, and like I say, it might be fun just to show you the similarities with the gold. Little bit of a sidebar. Crypto folks sometimes get angry and see gold as a alternative, a less interesting alternative to, say, Bitcoin and crypto. There's actually a lot that can be taken from gold and its role as an anti-fiat. So I'm going to put it on a weekly time frame and show you gold's move up and how you got put in a holding pattern also for quite some while. So you could see more obviously the 2k. I'm calling that the 70k on Bitcoin, and you can also see the broadening structure that was down and the bull up leg into it. So when they have this descending angle, it's typically an upside continuation pattern. And where was the key level of significance? The key round number, which is what I would say Bitcoin's equivalence of the $70,000 on Bitcoin, was the 2k on gold. Kept getting resisted and knocked back on 2k. The control structures didn't like that one. They don't like the idea of the canary in the gold mine cheeping too loud. What ended up happening? You broke it, as we predicted, once, twice, third time, fourth time through. And there you had your squeezy round about the top of your megaphone, just sitting on support of 2k, and bang, the next thing you know, you've got a support of 2.3. Looked weak over here, ended up smashing to a new high. King of the anti-fiats is gold. This is good news for Bitcoin, not bad news, because it points to the fact that the major king fiat is being dumped for a precious metal. Will also see flows into Bitcoin. However, Bitcoin hadn't done as well, and it shed from 72,000 down to the 53 level, while gold was in a funk, but wasn't doing nearly as badly. It was in a bit of a broadening structure of its own. It's so strong, the market, it's melting up regardless of the technicals. Here, again, a bit of an upside broadening. Normally we would associate that with rest. All it actually is a pause before more buying coming in. And there's your your new high on gold. So Bitcoin watchers, a new high on gold is not bad for you, it's good for you. Of course, there's some competition for flows, but it means a dumping of the fiat and the dollar classes. Similar structure to what I've just shown you on Bitcoin. So how did we get it so wrong on that? I mean, we literally came in at the perfect time near the lows and started saying, I wonder if this will be a short, just before it surged. That's right, we admit that timing wise, that was a perfect mistime when we called it. So if we have a look at that, I'm going to flip the chart again, and I'm going to tell you that threat that reared its head has been killed. Why? Because we have a specific way of looking at this, and there has to be a stop. You've got to accept, you must have a level where you accept that you're wrong. Always. How do I be wrong with this, you might say? And this was the key thing that we got wrong on the Bitcoin direction. We wondered, are we going to go demand destroying event and go to a spill? And why did we say that? Let's just revisit that. By the way, the Bitcoin dominance analysis we continue to stand by. And this is why when we were saying, yes, it's an alt run, but we're just concerned about the direction of Bitcoin. You could actually go up in alt dominance and down in Bitcoin dominance, even in a sinking market. Now that Bitcoin is actually reversed, the chances of that are greatly reduced. So it's a perfect environment for what is a more normal alt run, when Bitcoin is also being reasonably firm and moving up, just less so. So let's have a look again and just remind you why we said what we said and why it's invalidated. How did you have two opposing views, and which one do you then pay credit to? Well, the market tells you. So we spoke of the small shouldered complex head and shoulder. There's your two right shoulders. This is typical of normal reversals, and these usually work, but patterns are not 100% guarantee. Remember the rising wedge here? So this is inverted Bitcoin. So obviously for bullishness, you want the chart to go down. Red candles good, green candles not good. We spoke of this double top. That we did call at the 67 and said Bitcoin's going to come off more. It's going to run 62. It did in fact run 62. In fact, it went over there to 58, so it overperformed. And then you got this right shoulder. And then we looked at this and we said, hold on a minute. We've got a W head here with two smaller shoulders. We gave you the whole lecture and reason. But what does that mean for stop placement? Stop placement for the pattern to remain valid is at the bottom of the shoulder. 64,000. What has just happened with Bitcoin's move? We suggested when there was a shooting star here and some selling wicks that don't enter, wait for, there's clearly a pullback coming. You might get an opportunity at the neckline. Not only did it come to the neckline, it was actually accelerating and went through a spill. And at that point, that pattern and that whole idea was you set up, you tried to get going, the market said no, and that was partly driven by the three drivers I mentioned. Dollar, Finkelstein, BlackRock comments and more positive PR, Trump for president odds, and crypto friendly, all that goes with that. Those three drivers suddenly showed up, and you got this invalidation of this potential reversal pattern. By the way, this pattern still exists on the normal way around. Sometimes it's just easier to see this way. This sudden turn is an invalidation. You've got to, with every possible pattern, because patterns are not 100% guarantees, they're possibilities and probabilities. You've got to have a level where you accept you're wrong. The good thing is, this cost me nothing, because I hadn't entered short. I was watching the dominance and I was prepared to play cross crypto because I wasn't so sure about the direction of BTC. I was more confident about BTC dominance. So let's talk about that. Bitcoin has now shown us it's actually in recovery mode, and the dollar has shown us it's going to support Bitcoin by being super weak. So now we bias broadly back long, which is more comfortable for us because this is a bull market. It was a bull market from when it turned at 15K. It did get the ETF move. It is broadly in a bull cycle, typical with the halvening cycle and everything else. And in fact, we're waiting for that alt market. Everybody's been waiting for that alt market, it seems, and when it's going to come. So now we go back to the Bitcoin dominance chart to show that again. So now we have an extra piece of the puzzle that's been corrected on our potential concern that was around the Bitcoin direction itself. Now dominance, let's go 2 weeks on that one. So this is a fortnightly chart. So what do we actually have here, fine people? We haven't changed our view on this. So I think we got one part right and one part incorrect. I prefer that the incorrect part is actually the Bitcoin, because if Bitcoin is stable or firm or rising, it's a better environment typically for the alt bull market. And this is super low volatility. This is squeezy. And many people go shitcoins, and I think many people, when they use that phrase, are particularly talking about meme coins and micro caps. I don't think with the amount of years that have been in existence that it's fair to actually refer to Ethereum, ADA, and all of these are shitcoins. If you listen to Charles, there's a legitimate guy there who's doing real work and is doing applications. This is, let's be frank, it's not just going to be about digital gold. Surveillance finance that is coming for you is absolutely going to have applications in blockchain for them to strip your assets, the tokenization of your home, to later buy you out and turn you into a tenant into your own property. All of those things are going to be based on the blockchain and on apps and on virtual digital proxies, derivatives of real assets. We know that's where they want to go from our reset thinking. Remember, we're the reset sniper, the crypto sniper that we're wearing the hat for today, and the market sniper, which keeps an eye on traditional markets, dollar and everything else. And we are readjusting as we are correcting for errors. Dollar weakness, Bitcoin dominance, super low vol, a breakout. Now, to be accurate here, it's still possible that this breaks one more time to the downside before reversing strongly, but it will generally reverse pretty strongly, and it wouldn't shock me to see 44, even 40%, somewhere there in this range. So I'll put a box here on what I think could happen. That's where you'll top out. And I want to highlight why we say that. Super strong. When the alt run comes, amazingly enough, despite Bitcoin going up, this was Bitcoin 20K, by the way. This was Bitcoin 69K. This was Bitcoin 64K. Despite Bitcoin going up, its dominance sheds when there's a major alt run. In other words, all the other named, and it's typically the big market caps that are eating bigger slices of the pie. The pie goes bigger because the total market cap is climbing. Bitcoin's percentage of that pie reduces, even though Bitcoin is going up. It's going up less so than all the surrounding alts. So at the peak bull market of 2017 December, actually Bitcoin's dominance was barely 35%. In the bear market low as the original, even though everybody's gone down, including Bitcoin, it was at 73%. So those alts fell 96, 97, 98%, some 99%, while Bitcoin shed 80%. Then we come again here, it got up to 39, just 38, and even 37% at the last bull market high, the 64 and 69. That had a more complex topping. It wasn't a blow-off church's steeple top. It was like a number of attempts to get out. You get what we call the muffin topping here. Complexity, zigging and zagging in and out. And then you had a low volatility, inching down inside a falling wedge with the capping descending grind line in red, that's this one over here, into a very low volatility period now. Now, as I say, you could have one more spill out of this, but overall, if you're asking me where Bitcoin dominance is in 3 months' time, not tomorrow, where, as I say, you could spill one more time. I'm not saying it has to spill, but you could. Overall, in 3 months' time, I'm expecting that you're going to be in the range here. That means the major proper project alts that are typically the market cap that we focus on, that is in the top 15, which can't be manipulated by me saying, hey, this is looking great. There's no point. I don't get any pump and dump benefit out of it. This is not some small tokens. But what you're going to do is get a bit of an Nvidia effect in some of the ones that get chosen to do major parts of the new financial system. And they are going to rocket in relative performance to Bitcoin. And we get here, and then later, after a small pullback, I would imagine, a small pullback, we expect right the way through a fall of the 20%. So you're going to have some new names and some existing names that have grown substantially. That's very good. It keeps the door open. That prediction keeps the door open for out of the blue surge in XRP, for example. Long established, well-known token. That keeps, technically we're interested in ETH. We spoke about it. And my favorite right now, my favorite is Solana. So let's go to Solana for outperformance. And why do we say so? Given that now Bitcoin is going to be biasing bull. Now before we do that, I'll get Solana up here. But I want to just show you, that's the inverted Solana on a really big time frame. I want to show you it in a normal view. So we'll go back to normal view. It'll probably put silver in there again. So we'll stick Solana back on. Silver futures looking great, by the way, for those of you that also watch the traditional markets. Gold at a new high. This is all very good. So here's where Solana is. I'm going to take it down to daily level and just squeeze a little bit extra data. This is a strong move up. And why do we like this best? Because it never ran its low. That was the low. It was actually on an axis of a legacy funnel. You can see that orange number. You can see that was a support on the just in time of that same funnel that came from setups long time ago. And in actual fact, both of these base painted lows over here and here have occurred, and this is a higher level than the support. This, of course, is a lower secondary high. It is slightly descending of structure, so you're coming down more across the highs than the lows. However, with this momentum, you're likely to make a strong RH3 somewhere in that box zone, for example, before having a mild rest back into this major funnel over here of a previous setup. So this is when you reach a funnel, you typically break it with momentum. A small reaction, note the dip back down. By the way, I was very lucky with that. Wow, I was lucky. I put this W draw, so getting the alts back on against the dollar. Don't forget we were talking cross crypto the previous video because we were concerned for Bitcoin's direction. Bitcoin's direction now resolved. That reversal cancelled. That shoulder stop was run. Means Bitcoin not a down. It's either an up or a sideways. So what that means is we can go back to trading against the weak dollar because the dollars also turned. So we had the dollar turn and Bitcoin turn, both in the opposite directions. Perfect combination and fresh and new trend. So there's still a lot of vigor in all of those. So you're going to be looking at a third high up here maybe, and then a minor pullback, maybe a falling wedge, and then a big move in USD terms for Solana. So we can speculate. We'll be doing that in our community. Don't forget, hit the link below. Join our self-study program. There are no trading metamorphosis programs available. You cannot get into the community, but you'll get a Sunday session with us live. You'll get all the learning materials, and you will get the live trading days for your 6-month period. And later, when we make TMPs available, excuse me, you will be able to upgrade in the first 3 months. So watch out for that. But anyway, that point aside, this points to overall in excess of $3 just on this one structural pattern. We feel that you could be 330 on Solana before you get a meaningful pullback. That's not the top, but that's a good run before I would take maybe 50% profits and expect a little bit of a pullback. Beautiful pattern, big time frame. This is a daily setup, guys. Big time frame, and you failed to run these lows. So there was a real flaw under here. As I've said, the descending structure could flatten out if you get a nice high RH3 and you square up with a nice strong upward leg to the RL3. Dominance to Solana. How's the Solana dominance chart looking actually? Now remember, when you do a Sol D, it's very close to doing a Sol BTC. Why? Because the biggest market cap that you're comparing it to, one of the largest slice of that, is actually Bitcoin. So we want to show you falling wedge last time. Solana broke out of that falling wedge. So this is legacy analysis that we've done inside the community. I leave all my old draws on. It's quite interesting. And you got a real surge there. So that gave you the heads up. By the way, 3 impulse, by the way. And you're already in a bull trend. Key inflection point on a rising wedge. Not all rising wedges break down. Super surge, 1. Second impulse, 2. Third impulse there and there, just a small dip down, and then inching your way across. That was an upside HVF like that. Boom, boom, bosh. Squeezing up against the capping descending grind line. Meaning break, major surge in dominant Sol, major surge in Sol USDT. Great. Okay, so Sol as an early runner in this crypto new bull of the alts. We like the early runner. We always tag the one that runs early because it comes back and is typically the stronger. You don't go chasing into Litecoins of this world that haven't run yet, or the BCHs, or some of those things, getting into old news that weren't really dynamic in the early part of the move. The ones that run the most actually are the ones that run first, typically, and they are the ones that are going to make you the most money. Don't miss a chance to get in them. So for us over here, you're either funneling here, and you're getting a major move to the upside in Sol Dom. And in fact, it's triggering right now. As I'm recording this video, 16th of July, 2:45 p.m. Miami time, in the jungle. Welcome to the jungle. Did I say that? I maybe did. So, upside in dominance. We do the draw in the community, and we use our draw tool, which I've shown you a couple of times. That's for all our members that have been with us for a year. And you get to do these exact targets on dominance that you should expect, where you could take a little bit off, expect a bit of a pullback, and get back in a little lower down. So we've shown you Sol dominance on USDT with a real upside squeeze that we are suggesting at least, well, it's no longer quite a 2x because it's already moved a bit, but around 330. But it was, when we were first talking about it in the community, Sol was 130s, 140s and 150s, so it was over a 2x. Now at 167, 168, we'll have to have a look at what it is now. You're only just getting about between 80 or 90% move. Still awesome, and that wouldn't be the top call. That's just, okay, it'll rest for a bit, maybe take some of the profits off, look to put some on later on, lower down. So, Sol dominance. We also, in the one video, mentioned Ethereum. And we said ETH, big market cap, also doing okay. And we pointed out ETH dominance. And this was the chart we're on. A much bigger time frame, so it'll take a little bit longer to play out, but this is a bias to Ethereum breaking against Bitcoin. For a real alt run, as many people hate Ethereum, for the statist reasons and many things else. Well, they're all statist as far as I'm concerned. There's very few that aren't. So's XRP. You know, they're smooching and cuddling up to, you know, the central bankers. All of these people. I'm afraid, sorry guys, you know, I haven't got good news for you there. The winners are going to be the likes, you know, the Palantirs, Equities, Peter Thiel, Friends, all of the people that are statist. There's a little bit of Zionist in there. There's a little bit of sheeple control in everything. I'm afraid it's not good news. But overall, this will work its way up, and we suspect it will break to the upside. However, Sol looks more ready, and the earlier mover is the better. So I put Sol actually ahead of Ethereum, although I expect Ethereum to do well. You don't get a real alt run until Ethereum is also properly running against the others in terms of its dominance. So let's have a look at ETHBTC. So there's the falling wedge. Let's put this on logarithmic again. There's your falling wedge against ETHBTC. Again, 3 impulses largely done. A very big bloated second impulse. That was a long, weak period for Ethereum, you know, shedding value. You could argue that might have been done there and that was your third impulse, or it's all part of the second. That was clearly your first. And now you're pumping up and you're squeezing up against that grind line. That's the point where we think eventually you're going to get some upside movement relative to that. One possibility, remember I said on the BTC dominance there could be one more dip down, so the BTC dominance could win the short time frame chart, the hourly and the 2 hourly, and you get one more dip down. If that were to happen, you would also just get a dip down here before coming back up, so you could get prolonged one more time. But we'll look at this now and you can make up your own mind. But there is that possibility. There's that possibility. When you get a squeeze like that, there is both way major move. There's an impactful move in both directions. In other words, you're not going to continue to be low vol. There's going to be an expansive volatility event. Our bias remains when you are squeezing up as a fractal against the capping descending grind line, the expectation is up. But every now and then it goes down and then it comes back for a second bite. So you had this. You had a squeezing up here, only it was far more high volatility. You can see this sold off one more time. So there's been a false dawn or two for Ethereum. Now you've had this huge surge. That a bit came off the, you know, all the ETF talk. Now you have this structure. Will it be an up or will it be a down? At the moment it's on the heavy side, but it can work its way up. But if it were to break down, you could still go one more time to the downside, but then you have a very clear third impulse. The next time will be the winner if it's not this time. So you might be a bit early if you chase in. Hence why I put Sol first and then roll your way into Ethereum once this clarifies. That's why all the alerts. Are you breaking up or are you breaking down? A break is coming. An impulsive move is coming. Which way will it be? Are we going to extend a little bit one more time, or are we going to go to the upside. If Ethereum breaks to the upside through this capping descending grind line, no matter how much you may hate Ethereum or not hate Ethereum, forget the emotional aspect, it's a great shoe drop for the alt bull market. It's a great shoe drop for the alt bull market. If you're asking me to guess, I think this down leg one more time is quite high probability, and I'll tell you why. And that means your SOL, remember SOL is going up for RH3, it needs to go up and then it needs to pull back down, doesn't it? It needs a pullback down leg. So there's still another pullback down for SOL USDT to do its third leg. Remember that chart? I'll bring it up one more time. Some of you aren't photographic memory necessarily. Let's have a look at that. So just show you one more time why I say it's possible for that one more dip, that one more surge of Bitcoin strength. We could be looking, remember we said round about here, an RH3. Then what happens? A bit of a down leg. So you're going to top out maybe somewhere here for your RH3, and then you have a little bit of a down leg. That could be the point at which Ethereum also breaks down, a little bit of a down leg relative to Bitcoin. Then you end up with and another supporter of that theory that there's maybe one more down leg to come is also the total 3. So let's show you total 3. So this eliminates Ethereum. Please type where I'm typing. Total 3. That's the falling wedge for total 3. I'm just going to go and reg here because it sits a bit easier. So what are you doing? 3 impulses in the falling wedge. Note how this is a HVF for SOL and very close to being one for ETH. Not perfect, not quite for ETH. Again, why we say SOL is better. There. Big sell-off leg here. So you got your 1, you got your Greek 2, and you are making a third, which still might need a down leg. So that's why, as we make this video, it's not necessarily the final surge and breakout that you're about to get. You're going to go higher, but then you will have a corrective leg. So I think for both SOL, USDT, as I just reminded you of the chart, ETH, BTC, you first might visit downside before you break. So that even the Bitcoin dominance, that little, one more little tick to super low vol, if you can remember that chart, one more little fall out the bottom, final capitulation, pump the other way. That's what happens, and this is what I see. Possibly up and down. You might just go to the splitter, you might make a square bottom and W bottom, but the exciting part starts when you break the capping descending grind line. That's the move everybody's waiting for. That's the talk. So close but not imminent. Know the difference between close and imminent is my best on balance of probability guess. That's where you're going to get great money on the alts. Are you in the strongest alts? Is it going to outperform Bitcoin? Yes, is our opinion, but maybe one more moment where Bitcoin is still the boss and everybody will come on the crypto feed and say, look how wrong you are, look how you're flipping, all the usual comments that we get when we are readjusting technically to what happens in the markets, readjusting to the fact that the dollar took bad data and actually went down for once after having 3 months of bad data and just saying, what the hell, we're the dollar. This time it went down, major boost for Bitcoin. So yeah, we can only, we can only react once it's clear that the markets have decided to take the data seriously now. So suddenly they're expecting that downside. This is your alt run. This is what you want. And the best are you, the safest best. Listen, a super micro cap can do 10,000%. Good luck guessing which one that will be and trying to sell a meaningful amount. This is the safest place to be, is in the macro 15. There's no manipulators that can do you wrong on these YouTube channels on pump and dumps. For us right now, Solana first, rolling into Ethereum. That's it from the Crypto Sniper. Click the link below to talk to us on a call regarding the self-study. Hope you enjoyed the video. Hope we've clarified what's going on. Dollar weakness supports gold, cryptos, commodities, the whole world. It even supports the equity markets. So a lot of things could go up in spite of retail pain, consumer retail pain. The wall of worry will be climbed, and I'm expecting SOL to be one of the best for outperformance in the near term. But one more flurry of Bitcoin dominance is possible. Bye for now.